Good morning and welcome to Business Morning, a segment of our breakfast show where we take a deep dive into the trends shaping Nigeria's business and economic outlook. My name, of course, is Deborah Ezeh. Thank you for starting your morning with us. Now let's move to our first conversation for today. From local delicacy to global export commodity, plantain is fast becoming one of Nigeria's most promising agribusiness opportunities, with rising demand across West Africa, Europe, and even North America, not just for fresh produce, but also for processed products like plantain flour, chips, and animal feed. The industry is now valued in billions of naira. Analysts say this sector could create thousands of jobs, boost rural income, and help diversify Nigeria's non-oil export base. But what will it take to unlock its full potential and make Nigeria a leading player in the global plantain value chain? Joining us to explore this is Usman Muhammad Chiroma. He is an agripreneur, founder, and CEO of Service to Humanity Foundation. Good morning, Mr. Usman. It's good to have you on the show.
Good morning, and thank you for having me.
All right. So let's quickly dive into it. Let's first of all look at the market potential. Why is plantain agribusiness suddenly attracting this level of attention and investment in Nigeria?
Thank you for having me. There is an actually rising demand for the plantain-based foods, not even in Nigeria, but in terms of the entire world. And there is also a kind of growing awareness of plantain role in the gluten-free and even in some of the LD diets. And there are some certain major factories that are making use of the end product of the plantain, which attracts export. So this requires more people getting into the plantain farming and the rise in the high demand because of people that usually use the plantains for the plantain chips, the flour, and even the frozen of some of the plantain products. So due to this, that's what has actually led to the rise in the high demand of the plantain in Nigeria and even at the global.
All right, I'm still looking at the market potential. What is the current size of Nigeria's plantain market? And I'm talking about locally and in terms of export opportunities.
Presently in Nigeria, we are locally Nigerian is one of the Africa's top plantain producers, with production exceeding about 3 million metric ton presently. And when you talk about the domestic market value in Nigeria, it is estimated at around 500 billion annually, with strong demand of most of the plantain product across all the regions of Nigeria.
All right. So beyond selling fresh produce, what are the most lucrative processing opportunities in the plantain value chain?
Yes, you can decide to make use of end product of the plantain, like the plantain chips. It's usually used for snacks with high market margin and demand. And aside the plantain chips again, we also have the some of the dry plantain powder, which are used instantly for meal. There are people that usually used to consume the instant plantain powder. And not only the plantain powder, we have some of the plantain-based pastries for confectionaries that people usually used to feed on them. And some of the like the chip, the chips and other things can also be used for animal feeds. So some of these things are the end product or things that people can use in the plantain sector or industry. The plantain chips, the dried plantain that is used for powder, the frozen pre-sliced plantain, which mostly people use it for exportation.
Okay, so still on the value chain, how do you think local farmers and also small medium enterprise as the SMEs can tap into the value-added products like plantain flour or chips for higher profit margin?
They can decide to invest in some of the basic processing equipment like the peelers, slicers, dryers, and fryers, and even grinders. But some of, just as you have said, the small scale businesses, those that are involved in it, the best thing they need to do first is possibly by organizing themselves into possibly cooperative to pool resources for their small scale business plan. And again, there are some certain leverages in the e-commerce and social media for direct to consumer scales. They also need to obtain a NAFDAC certificate, because once you have a NAFDAC certificate and your product has been well licensed, this will enable them, even when it comes to exporting some of their product outside the country, it will ensure that they have already been certified by one of the food satisfying agency in Nigeria. And aside that, they equally need to register their business with a corporate affairs commission. So once they have all these processes in place, it will help their marketing value. And equally, when they need to export the product outside Nigeria, it will be an added advantage for them to be able to do that.
Okay, now let's move our focus to the investment and the financing part. So what level of capital do you think is typically required to start and scale a profitable plantain agribusiness here in Nigeria?
That will equally depends on the size of how the person wants the business to look like. For instance, someone that want to invest in possibly like 1 to 5 acres of land in terms of the plantation, the person might require a small scale farming capital of around 500,000 to 2 million naira. That's for the person that want to invest in the 1 to 5 acres. But if the person want to possibly export some of those products and do a production in a larger scale, we call it medium scale production, where you're going to be having end products like the flour, the chips that you'll be able to export. The person might possibly require a capital of 5 million to 10 million. Sometimes possibly 3 million can equally do that. It depends on the sizes the person wants. And if you choose to go on a larger scale production, whereby you are going to be processing most of those products yourselves, you might require 20 million and even possibly above 20 million.
Okay, so let us know if there are actually financing or grant programs available for entrepreneurs or people looking to enter into the space.
Yes, there are a series of financial opportunities for people that want to invest in this. There is even a CBN Anchor Borrowers program that's for farmers, and you know that those that are into plantations are equally farmers too. And we also have some of the financial opportunities in the Bank of Agriculture that they usually use to help people that are into not only the plantation but other farming produce, especially those farming produce that have high demand and export opportunities in Nigeria. We also have SMIDAN, small and medium enterprise, and even NASAL microfinance bank. So all these usually is to give loans in small digit interest to farmers and even those that are into plantation. We have African Development Bank, we have IFAD, and a lot of things. And even there are some certain state governments again who are equally supporting their own people that want to involve in some of these farm produce.
Okay, so let's move to the challenges. What are the biggest bottlenecks? Because in every enterprise we have bottlenecks. So what are the biggest bottlenecks facing the plantain industry? And I'm talking from farming to processing and also to export.
Like in most of the agri-produce, in terms of the plantation, one of the challenges we face is high loss in terms of harvest produce, due to poor storage facilities we have, and even transportation is one of the major factors that has been affecting. So this usually used to lead to high loss if you don't have a good transport system and even storage facilities. After harvest, if you harvest in a larger quantity and you don't make a provision for facilities to store them, to process them into the end users, you end up losing most of the produce that you have farmed, and even limited access to affordable equipment. Most of the equipment required for this processing, the peeling, and the harvesters, they are very expensive, honestly, and we don't have those ones that are locally being manufactured here. So for you to be able to afford them is one of the challenges our people face, and even lack of standardized quality of exports. There are certain criteria that need to be met before you export your produce out of the country. So our people usually used to find it difficult to meet up to this standardized quality.
Okay, so
these are some of the challenges our people are facing.
yeah, you mentioned harvest losses. So let's talk about post-harvest losses. How do you think infrastructure and storage and also distribution network can reduce post-harvest losses?
Yes, we can decide to improvise, and I think that is usually used to help. If you cannot afford most of these high equipment that will be required for storage, they can decide to go on a cold storage system, getting a cold room or a cold storage system, or even possibly a refrigerator trucks can equally help. You can decide to get a refrigerator trucks so that right from the farms, once you harvest them, you can just put them there before you even get to your factory or your home, where it will be well processed. And if possibly, you can improvise and go into a gas cold refrigeration system, because if you rely on the available normal electricity, we all know the factors we are facing not only in Nigeria but virtually Africa. There is always the light challenges, and when you have a light challenges, that will speaks of the loss you equally used to have. If it's a gas, you just need to make a provision for the gas, and it will power your cold room, and that will equally help and reduce the loss in terms of the high post harvest.
Okay, so where do you see, let's look at the future now. People say plantain can actually be a non-oil investment for us here in Nigeria. So where do you see the Nigerian plantain agribusiness in the next, let's say, 5 years? And what policies would help the sector thrive better?
Yeah, with the level at which Nigerian is going now, and with our previous estimate production of about turnover of about 500 billion annually, if government can put in some certain policy in place, possibly by creating an agency or an organization that will serve as a mitigation to help the farmers that are into this plantation, assist them in meeting up with some of these quality measures for exportation. This will be of good help because it will improve our export value, and it will equally improve our economy value in terms of exportation. And again, just as you have asked, possibly if they can do this, potentially Nigeria will be one of the major export commodity of plantain, not only in Nigeria but in Africa and in the world, if we can come up with this policy. Because we have the land, we have the human capital, and our lands are fertile. The only thing our people need is the basics, farm tools, the processing machines, and other necessities. And if this can be in a place, I see us taking the central stage in terms of plantation marketing in the whole of the world.
Okay, so for young entrepreneurs, do you think plantain business is a realistic path to wealth creation in today's economy?
Yes. No, most of young people, when they see this anything farming, especially that of the plantain business, they always assumed maybe you have to take a hoe or possibly do the tilling of the ground and other things. But no, farming now has advanced beyond level. And aside the plantain business, there are a series of value chain in the plantain business. You might possibly not even be the one in the farm. You can be a kind of a middleman, meet those people that are doing the farming, get it from them. You also just be the processing. You can decide to just focus more on the chips aspect. We have a lot of people who are doing the processing and focusing on the plantain chips, and they are making huge amount of money into it. So you doesn't necessarily need to enter into a farm for you to be involved in the plantain business. If you don't want to participate in the value chain of the plantain chips. You can decide to go for the flour. And we have a lot of people that are using it for confectionaries and a lot of things. If you're not even satisfied with that, you can decide to go into the end processing of the animal feed. So all these things are value chain. So young people can decide to take advantage of this, because I believe there are still young people that have this belief of, when they hear anything about farming, the next thing that will come to their mind is no, it's meant for old people. They cannot just start entering into the farm, taking their whole, looking tattered. No. Farming is now beyond all that, especially in terms of plantation. There are a series of chains of businesses involved by not necessarily farming it yourself. But even if you intend to do that, you can decide to go on a small scale, and at the end of the day, you will also be earning big in terms of this business.
All right, thank you so much, Mr. Usman Muhammad Chiroma, for your insights on Business Morning this morning.
Thank you so much for having me. It's my pleasure.
All right, we'll go on a quick break now. When we come back, we're going to be having the second part of our conversation on Business Morning. Just stay with us. All right, welcome back. You're still watching Business Morning on The Breakfast Show. Now let's move on to our second focus for today. The Nigeria's equity market has continued to see activity across various sectors, with the insurance index drawing particular attention from investors. After a period of relative underperformance, the sector has shown signs of recovery, buoyed by improved corporate earnings, recapitalization efforts, and renewed investor confidence. About the recent rallies, a key question arises: is it already too late to enter the market, or is there still room for growth in insurance stocks? To help us unpack this, we are joined by Dr. Goodluck Nnorum. He's the Director, Center for Data and Analytics and Simulation, Caleb University. Good morning, Dr. Goodluck. Thank you for joining us on the show this morning.
Good morning, and thank you for having me.
All right, so let's look at market potential. How has the insurance index performed compared to other sectors in the equities market this year?
Thank you. I'm going to be clear. The Nigerian insurance sector has actually delivered, contrary to expectations, it has actually delivered. And when you look at that performance, when you compare it, for example, with the consumer goods market, all right, the consumer goods sector, you find out that the insurance sector has actually delivered. And by the statistics I got, I saw that it went up as far as 123% gain, all right, as at 2024. And then in addition to that, we saw a 26.9, leap compared to the previous statistics. So it didn't just perform per se, it coasted in 2025. And a lot of factors have been attributed to that, but I'll leave that for a further discussion. So when you look at mid-2025, you find out that we saw about a 4.5% gain, all right, looking at the total insurance market capitalization, and that grew to about 586.86 billion naira. This is according to the source from Tribune. So as much as possible, we can say that the Nigerian insurance sector has actually performed contrary to expectations, and this has seen a lot of interest by investors, pumping in money into that sector.
Okay, so what are the main drivers behind the recent movements in insurance stocks?
All right, as you would have it with every business environment, there are specific factors that actually drive growth or drive development. Now, looking at the Nigerian insurance sector, you find out that as much as possible, don't forget that there was a reform, all right? That is the Nigerian Insurance Industry Reform Act. Now, that reform helped to solidify capitalization for insurance firms. It helped to make the insurance sector look a little bit more promising. And as much as possible, this has led to massive interest and investment in in the insurance sector. So as much as possible, what was done with the Nigerian Insurance Industry Reform Act is not just necessarily about another housekeeping routine. No, the interest was to ensure that the Nigerian insurance sector had a structural rebate, all right? And from what other analysts are saying, all right, it's found that this can be seen as the most far-reaching, financial sector reform, compared to other reforms that had happened in the Nigerian financial sector. So with this, we saw that there was about 299% surge in trading volumes, all right, and then the insurance index itself clocked at about 8.6%. And rose to about 1,178.56. This is according to AI Invest on the Nigerian insurance outlook. So as much as possible, we have seen some insurance firms leading the front line. We have Mutual Benefits, ICO Insurance, Royal Exchange, and each of these were actually nearing up to 60% in performance volume in the past weeks.
All right, let's shift our focus to valuation. Do you think that the sector is currently overvalued, or is there still upside potential for new investors?
I would say it's overvalued, especially with the reform that was done. The insurance sector is not actually overvalued, and there is still room as far as investors are concerned, especially new investors who want to jump into the market. There is still room. Okay, so as much as possible, we won't say that, because it is doing well, that means everybody should join in. But I would insist that it is not overvalued. All right. So what happened is that you see that insurers are actually unlocking stronger profitability. A lot of consolidation happened, and this helped to eliminate weak players. There was a lot of digital transformation, all right, which helped to open up new markets. And then with the Insurance Act, regulatory clarity came into play, and this helped to improve trust and visibility. So as much as possible, it is not overvalued, and there is room for new investors who may want to cash in on this opportunity.
Okay, so let's look at entry timing. Now, for retail investors looking at this sector, do you think now is a good time to enter, or would you advise caution?
Well, as with every project, as with every investment, caution needs to be taken. Understand the market properly, know what the signals and the numbers are saying, all right, before jumping in. But for retail investors, this is actually a good time to cash in. Why I said it's a good time to jump into that investment in the insurance sector is because, as mentioned earlier, weaker players have been eliminated through consolidation. So because of this elimination of weaker players, you find out that retail investors have the opportunity to jump in as we speak. And don't forget that we're still looking at the mid-year. We're in August, right? And there is still room. A lot could still happen before the end of the year. So it's a good time for retail investors to cash in. The only thing I will advise is to start small, all right? You don't throw all your eggs in one basket, as they say. Start small, understand the balance sheets of these firms, try to understand the routine or the rationale behind their digital adoption, especially looking at technology, and make your decision as much as possible.
Okay, so how do you think, or how are recapitalization requirements and regulatory reforms shaping investors' confidence in the insurance sector?
All right, so like I said earlier, there were a lot of consolidation, weaker players were eliminated. So the Nigerian Insurance Industry Reform Act came in as a complete reset. Okay, it came in as a complete reset. And so this reset led to recapitalization and where consolidation as much as possible. Now, what it means is that non-life insurers, for example, now need about 15 billion. Life insurers need about 10 billion. Reinsurers, of course, would need about 35 billion. So this can be seen as a massive upgrade from what it used to be at 3 billion, which was the baseline as at 2007. So looking at that, there is now zero tolerance for claims delay, policyholder funds, and then the issue of licensing rigor for agents and brokers have been managed properly. So the recapitalization requirements and then, of course, these regulatory reforms has really helped to shape investor confidence. And we can see that from the numbers, because the numbers don't lie, the figures don't lie. We can see that after this act and all the housekeeping changes that were done, we saw that there was a lot of surge in investments in insurance. And so another key factor, another key agent to discuss here is NICOM. NICOM actually helped to enhance enforcement and making sure that those who fall short as much as possible are sanctioned for it. So all of this put together has made the confidence of the investor to grow.
Okay, still on industry fundamental, to what extent macroeconomic factors, and I'm talking about inflation, interest rates, and also the FX volatility, to what rate do you think it's affecting the performance of insurance equities?
All right, so like we know, the macroeconomic factors in Nigeria, they can decide to act at any point in time, whichever way they choose to go. But the thing is this: they would definitely, or they have definitely affected insurers, especially looking at their investment yield stress and all of that. But the issue at the end of the day is that as much as possible, last time we saw, or I don't know if that has reduced or if that has changed, we saw that the inflation rate is actually still high as much as possible. So what it means is that if care is not taken, sharp inflation or a slippage in foreign exchange can still or could still, all right, rattle the market. So what it means is that smart investors must not ignore these signals. They must find a way to hedge. They must find a way to invest, in a subtle manner, such that all their investments are not swallowed up by the fluctuations of these macroeconomic factors.
Okay, given the economic pressures, let me just give a follow-up on what you said. Do you think the insurance companies adopting any specific strategies? And I'm talking on product repairing, portfolio diversification, or capital restructuring.
Yeah, as much as possible. Let me get your question again so that I don't make a mess of that.
All right. So I said, given the macro pressures that you mentioned,
Okay.
Yes. Do you think insurance companies are adopting any specific strategies? And I'm talking about product repairing, portfolio diversification, or capital restructuring.
Yes, of course. Last time there was, I think, some insurance firms are now looking at micro pension. All right, trying as much as possible to see how they can ensure financial inclusion. So that is one way some of these insurance firms are going to manage some of the pressures that they experience. Then, like I said earlier, consolidation, bringing stronger players together. All right, eliminating weaker players is another strategy that has been used by some of the insurance firms to ensure that as much as possible, some of the pressures from the macroeconomic factors don't really eat them up that much.
Okay, so we're wrapping up. So let's look at the risks that investors should be mindful of when they're considering entry into the insurance index.
All right, some of the risks that should be considered or that should be taken proper caution of is timing. Timing is very important, and when you talk about timing, you're talking about volatility. All right, a 41% increase in a week, all right, could also mean about a 10% plus corrections. Okay, when you look at volatility, but now the problem is that smaller insurers may struggle to meet new capital thresholds, and some of them might actually vanish, or they might be forced all right, to find a way to consolidate. So as much as possible, these are some of the risks that needs to be considered. Volatility, struggle for capitalization, which may lead to exit from the market, all right, or forceful consolidation. And then there could be what I call execution gaps. And what is this execution gap? What it means is that as much as possible, the legislation available can only be potent only if there is proper enforcement and not just to talk about it. So now that we are seeing a promising run in the Nigerian insurance sector, it is very important that NICOM should ensure that they enforce some of the provisions of that act so that as much as possible, there won't be gaps in execution by some of these insurance firms. Then, of course, macro shocks should also be considered because inflation still surges and there could be foreign exchange shock at any point in time. And this could, contribute to the fall short of investor confidence. So all of these factors, as mentioned, needs to be considered, or insurers need to be mindful of them when trying to improve their game as far as the Nigerian insurance sector is concerned.
All right, so looking ahead, what would you identify as the key catalyst for sustainable growth in the insurance sector?
All right, so the elephant in the room, from the positive side, the act, the Nigerian Insurance Industry Reform Act, is actually a very good catalyst, all right? And this has made us to see a lot of promising run in the insurance sector. So that is more like the backbone of the structural trust that investors are seeing or that investors are enjoying as far as the Nigerian insurance sector is concerned. Another catalyst is consolidation. So what it means is that bigger focused insurance firms or insurance players tend to gain more market share and they tend to scale more, all right, as a result of consolidating. Now, insurance penetration is also a catalyst, and this is being made possible through digital and retail channels. And so this helps underserved markets, all right, to be reached. And I mentioned earlier the micro pension and all of that. So all of this put together, and then we're looking at a strong third quarter and fourth quarter earnings, all right, and marginal performance. And as much as possible, this could sum up to prove that all of the growth that we are seeing in the Nigerian insurance sector for now aren't just hype, all right? Most of the reforms actually deliver the promise that are being stipulated.
Nnorum, for sharing your thoughts with us this morning on the Breakfast Show.
Thank you.
All right. Like what our guest said, the conversation around insurance index really highlights a crucial dilemma for investors. Is there still value to unlock, or are we coming in a little too late after the recent rally? But what is clear is that while the sector has shown resilience supported by recapitalization efforts, improved earnings, and regulatory reforms, there are still risks to be mindful of, from macroeconomic headwinds to sustainability of current valuation. But for investors, timing and strategy remain critical, and it may well come down to balancing short-term opportunities with long-term fundamentals. But we'll continue to track developments closely on Business Morning as the equities market evolves. But that's the much we have for you this morning on the Business Morning Show. Up next is Big Story. Do stay with us.